All right, welcome. Good morning, everyone. Okay, we'll get started for today's session. As usual, what we're gonna do over here is that we're gonna show you and share with you some of the traits that we talked about in the previous session. Okay, if there's any management, any outcome of it, we'll talk about it. And of course, what we'll then do is to look into some of the new opportunities that we can trade for today. All right. One thing here to take note of for this week is of course there will be the transition of president. Okay, happening depending on the time zone that you're in. Likely it's gonna happen between Thursday or Friday. Okay, depending on the time zone. So you want to take note of that volatility as well. Okay, so just one minor thing when we are trading, especially on the intraday. Okay, short term here, you want to also understand and be aware of what are some of the activities happening during the session that we are trading. Okay, and we want to factor that kind into our decision as well. All right, so without further ado, let's get started to quickly update on some of the trades that we have. Okay, so far the trade on the dollar yen that we have been talking about since last week is basically not moving. Okay, this trade here is still running. I will leave it as it is. Okay, other than that, really nothing much. Okay, so yesterday we talked about it that we wouldn't want to take any trade, right? Usually Monday is slow. Yesterday is also the US bank holidays. Okay, so we expect the market to be just quiet. Okay, and therefore there wasn't any trade. Okay, the only one that was like really talk about was this. Okay, but as I mentioned, I didn't really like it. Okay, so let's get started for today, okay, the 19th of January, and then I'll keep you guys updated as we progress as to what are some of the trades for today that we want to focus on. Okay, so let's get started with euro dollar. Okay, over here, okay, let me show you the big picture first, right? On a 4-hour time frame, we are still in a downtrend. Okay, the idea here is that as long as you have a lower low, lower high, we are in a technical trend. Okay, so over here you can see very obvious. Okay, so when we have a very obvious trend, then the methodology, the strategy we're gonna use is a trend following technique. Okay, and that means that we are looking at selling, okay, because the trend here is to the downside. Okay, and very quickly, what I'm going to do over here, okay, is to bring in my Fib. Okay, let me do a very quick adjustment on the color. Okay, remove some of it that I don't really use. Okay, let me add in the 786. Right, let's just make it like dotted. Cool, right? So over here you can see with the Fibonacci confluence, right? What you observe is, okay, we do have some area that is coming in pretty close. One here you can see is this structure level, right? Support and resistance. It comes in between somewhere near the 50%. Okay, that's one confluence to take note of. Okay, the other one, if I pull my Fib from this mini high here, you do see that the confluence come in at the 618. Okay, so this area between this 618, of course, if I pull it from here, that 50%, that would be that key zone to really take note of for a potential trade. Okay, and the idea here is we want to see if price can pull back towards this area. Okay, somewhere between the 50 and 618. So over here, how we can look to take this trade, right, is of course we are interested to sell, and we did identify that, okay, there are some key confluences between the 50% and the 618. There's a structural level over here. Okay, that's where I'm going to look to execute that trade. Okay, and of course there are two ways we can set our stop loss. Okay, one way is to put it all the way at this previous high. Okay, let me change that to red. Okay, one way we can do it is there. But usually for me, when it's doing a trend following technique, right, I would prefer to be a little bit more aggressive, right? As I shared before, I like to put my stop at 786, just above this mini high here. That would significantly increase my risk to reward ratio. Okay, so let's just do a very quick check over here, right? If I just simply base on this setting over here, okay, you do see that this is my risk, okay, and this is my reward. It's definitely more than 1:1, right? In fact, it can go as close as 1:2, right? That's the idea behind it. Of course, if I put this here, then you will realize that risk reward is only barely 1:1. Okay, so that's how we can look to take this trade. Okay, so let me go back to over here. Okay, and let me do a screenshot first, right? Okay, let me do this. Okay, at the same time, I'll update the spreadsheet over here. So this is on euro dollar. I think for those of you who are here yesterday as well, you probably hear me talk about this pair before, and why we are interested in this, right? Okay, so this one here is this. Oops, I think it's a mistake. Let me crop it correctly. Okay, so this trend is bearish. Okay, and we're looking for a sell limit today. The price here would be at 2135. Okay, you realize that what I did was I front run it a little bit, right? Initially here is 2137. Just round down a little bit. Okay, the stops we're gonna put at 2190. Okay, so a quick mental check. That's about 55 pips. Okay, pretty decent for an intraday. Okay, the idea here is you also want to manage your risk as you progress along here. Take profit as of now. We're just simply gonna keep it at that previous low. We do have an L4 camarilla confluence over here, so I'm pretty happy with that level. That will be around 2055. Okay, so this is the first trade here. I'm gonna set that in as well. Okay, this is gonna go in as a pending sell limit at 1.2135. The stops is 1.21890, right? And target here is 1.2055. Okay, so I'm gonna reduce this to 0.01 for this account size. Okay, 2125. Right, so this order here is in. Okay, that's the first one. Now let's take a look at the next pair over here on the pound dollar. Okay, so quick one. Okay, I think we have some good trades last week that we talked about on pound dollar, right? A quick refresher is like this divergence, and then we take the mini break here, and that was an almost very easy trade to consider. Okay, yesterday we did talk about it briefly as well with regards to we want to see that pullback. And we want to see it come back towards this 61.8. Okay, where we talk about the double top 618. And of course, where we have this 61.8, we do have this structural confluence around this zone as well. Okay, and you are observing right now over here is that this 618 comes in pretty close to the H4 camarilla as well. Okay, that gives us a potential area to consider for a short opportunity. Okay, taking a look at the 4-hour, I think that's also pretty good in the direction. The daily is a little bit more obvious. Okay, we talk about this sometimes back as well. We do have that divergence happening, right? Okay, so it's a potential reversal sign. So what I'm keen over here is to look for a trade somewhere around the 618. Okay, with of course the stop here needs to go above this high. If you're a little bit conservative, that's where you're going to put your stop. Okay, if you're a bit aggressive, you can put it just above the 786 where we have a confluence of a H5 camarilla. So we might see price respect that level, right? And of course, the target here, we're going to look at L4 to be a little bit more conservative. We do have some confluence or support resistance over here on the left. Okay, but if you're taking a look at the bigger time frame perspective, it can go way lower, right? But for me, this is good enough. We are looking for an intraday, so I'm looking to get in and get out in a pretty short period of time. All right, so let's put this in as well. Okay, this is on pound dollar. So let's add that into the PPT. Okay, I think the size is good. Right, so that's why here we're looking to sell. The entry, of course, technique here is sell limit as well. The price is at 3635. Okay, the stops are gonna put it on the aggressive side of it, so that's about 1.369, 3670. Okay, so for pound dollar, about 35 pips is pretty aggressive, right? Factoring in that pound dollar is pretty volatile pair. So something that you all want to take note of, factoring the volatility count. Okay, 3540 is where I'm gonna put my stops. Sorry, my target. Okay, if you take a look at this, this is definitely worthwhile the risk to reward, right? This one here goes as close as maybe about 2.5 to even 1:3. Okay, so it's definitely a worthwhile trade to consider. Okay, the entry is 3635, stops is at 367. Okay, and target over here, we're gonna put it at 3540. All right, so this is another one. Again, you want to factor in the fact that euro dollar and pound dollar, they are pretty closely correlated. Okay, so something that you want to consider, right? In fact, while we are talking about all this pair, they all relates to the dollar. Okay, so you want to take note of your total risk exposure as we are looking at all these trade levels. Okay, next up is Aussie dollar. We did have a decent trade here as well last week. Okay, for now, if you still remember, right, yesterday we talked about this where you need to be concerned of this low here. You can see there's some reaction. Okay, for now, this is still roughly in a range bound environment. Okay, we do not have a trend, right? While this move here looks pretty clear that it's coming down, but we do not have a technical trend because this low hasn't really been broken. Okay, so we do not have a lower low, lower high, so we are still in a range environment. Okay, so for that reason, usually I'll use like the harmonic pattern strategy to trade the range. Okay, but for now, there's really no pattern developing. Okay, one way perhaps for those of you who are still keen to consider the Aussie dollar is to pull in your FIB. You do see there are some confluence coming in around that 50 and a H5 camarilla. Okay, there are some key structure support resistance in the past as well. You can consider this key level around 730. But for me, I wouldn't be taking this trade simply because if it's in a range environment, I would rather use the harmonic pattern. Okay, and for now, there's no patterns forming, right? So next, we're gonna look at is the Kiwi dollar. Okay, 1 hour time frame over here, we do have a trend, okay, which is slightly different from Aussie dollar. Usually these two pair move quite close, right, correlated. Over here, you can see that we do have a lower low, lower high. Okay, this structure here has been broken. So we are technically in a downtrend, which gives us quite a similar approach on euro dollar, right? Okay, so if I were to pull in the FIB from here to here, you do see the confluence come in around 382, okay, where the structure is, and of course you do have this H5 camarilla confluence at the 382. Now, to me personally, I don't really like trading the 38.2 retracement because if I were to put my entry at the 382, right, then where would I put my stops? Because the idea here is to be very conservative, right? The only time where this downtrend is invalidated is when this high here is broken. Okay, so if I'm very conservative, if I put my stop loss there, then this risk here is very wide. Okay, because at any zone here, price can still reverse, and we are technically still in a lower low, lower high. We are still in the downtrend. Okay, so the idea here is that most of the time I really don't like, or I would say I would rather be very selective to trade to retracement. okay, because of this reason. Now, of course, what I can do is I can shift my stops to like 618, okay, 50, and as such to kind of like reduce my stop loss. But at the same time, it increases, okay, it's a give and take, right? At the same time, it will increase my kind of like probability of my stops getting hit easier. Okay, so usually in this situation, right, what I would rather do is I'll just be patient and see how far this can retrace for now. Okay, I wouldn't be jumping into this trade at this very moment. Okay, anyway, we have the euro dollar trade, right? So the idea here is you do not want to get overly exposed on quite similar moving pairs at the same time. Okay, next one here is on the dollar Canadian. Okay, I think we talked about this as well. On the 4 hour, it's a little bit clearer. You can see this double bottom. Okay, and we get a push up right now. So I'm of course more interested in the upside, but to give you guys the understanding, we do not have yet right now an uptrend. Okay, because if you take a look at this chart here, we do have this high, we do have this low. We are in a range at this very moment. Okay, there's no trend. Okay, so you can't really use a trend following strategy at this very moment over here on the 1 hour. Okay, I pull in this here. You do see there's a 50% confluence on the L4. Okay, but it's not something that I would like to take as of now. Okay, just that one possibility over here is definitely we can see price maybe come down a little bit. Okay, and then from there it starts to bounce back up, and you know, that would be a start of the move to the upside. But until we break this high here, we technically do not have an uptrend. Okay, and I wouldn't want to just simply trade the 61.8 Fibonacci level. Okay, I need more things coming in together, confluence together before I execute that intraday trade. Okay, so for dollar CAD, this pair here, I'm just simply gonna leave it aside today, okay, and see how it's gonna develop. I'll give it more time and come back tomorrow. Okay, next up, we do have the dollar yen. Okay, we talked about this at the start of the year, why this is very attractive to the upside, right? Very obvious, okay, if you take a look at the technical patterns. So we are more interested in the upside, okay? On the 1 hour time frame though, we do have a short trade, right? But it's really not moving, okay? The idea here is we want to see this come down first, at least towards somewhere around this area, and that trade will be done, and we are looking to buy on the big picture perspective. Okay, but for now, if you take a look at the intraday, right, there is no trend. Okay, this is basically a range. Okay, there's no higher high, higher low, there's no lower low, lower high, and when we are in a range, usually the pattern here we are looking out for is of course based on harmonics. We do have one. Okay, let me do a very quick fib check. Yeah, we do have one pattern, okay, that looks something like this. Okay, the idea here is, do I want to take this trade? Okay, to me, I wouldn't want to take this harmonic pattern here because the direction is sell. Okay, and we see that this is the momentum pushing to the upside, right? So this can be a very, very short-term trade, but it's going counter trend in a way because of this momentum. Okay, so for me, I'm not very interested in that kind of trade. So for now, I would simply leave this here and not really execute a trade. Okay, for some of you who are maybe on the 30-minute or even 15-minute, this is also a valid pattern over here. Okay, it will become a bad pattern, right? This is how it looks like. Okay, which it completes around the 886. Okay, so let me just pull that in. Okay, anyway, it's somewhere around that, right? So a bad pattern completes at the 886. Okay, so take note of that. For those of you who are keen, okay, you can definitely take this trade anyway. You know, there's high probability on the patterns. Okay, anyway, the risk reward is gonna be worthwhile for you because you're gonna look to enter around the 88. Your stops is gonna place at 100%. Of course, your target over here, because you are going counter trend, you want to be very, very conservative with your TP. Okay, One way to set it is somewhere around the H5, and of course your second target can set it around the H4 level. Okay, but even if you set it at the first target, you can see your risk reward is slightly more than 1:1, which pretty much, you know, makes sense for a short-term intraday for now. Okay, so this is something you can consider, but I personally won't be taking it from this perspective. All right, so let's move on to the next one. Here is on the dollar Swiss franc. Okay, over here, this trade, there is a decent one to consider. And this one here is, of course, you can see here. Let me bring up my two. This top. Let me do a very quick check if we do have a divergence. Okay, not really. Okay, now, what I would like to see, of course, is while we are forming this kind of topping formation, I want to see some kind of divergence. But for now, I'm not seeing that. Okay, that kind of reduces the probability, right? On the higher time frame, we don't really see that as well. This peak on RSI didn't break above the extreme territory. Okay, on the 30-minute, on a very, very small scale, we do have one mini divergence over here. That's a very small one. Okay, something here, not very obvious. Okay, so to me, it's not a very high quality trade. It's decent. Okay, but it's not something that I would just jump onto it. Okay, so for those of you who are keen to consider, of course, you'll be looking for the breakout reversal, right? When you have a double topping formation, usually you're looking for the reversal. Okay, so your entry will be the weight of the break around 8895, just below this mini low. Your target can go at the L5 camarilla. The risk reward is about 1:1 because your stops are going to place at this previous high. Okay, this is not a trade that I would personally be very, interested in it, simply because just now I share with you, right? There's no divergence, there's no confluence in the setup and things like that. Okay, so for me, I'll personally leave this trade over here. One minor check to see if we do have a pattern that we can trade. Okay, see if this fulfills that fit. I think it does. Just right there. Okay, I think just on the dot. Okay, but this is a little bit deep, right? So yeah, I personally won't be favoring that. Yeah, no, right? So I'm not gonna take this. I was looking for if there's a sharp pattern. No, I'm not taking that. Right. So let's move on. Next, last one here for today is gold. Okay. Now we talk about this, right? That likely the direction of gold is down. But we talk about like intraday, there's really not a very clear direction to really trade it. Okay, on the 4-hour time frame, we do have this divergence happening, which means that likely there's gonna be a reversal to the upside. Okay, which what we are seeing right now is happening already. So that's something that you want to take note of on the 4-hour time frame. Okay, and if we go down to the lower time frame perspective, 1 hour, you can still see that divergence. Okay, so one way to trade this kind of setup, right, is of course you wait for the break of this high here, and you do anticipate that because this is kind of like the neckline, right? So once you break this, you anticipate an equal move to the upside. So usually if you trade it, okay, your stop loss and risk to reward ratio is about 1:1, which is pretty decent, right? It's a valid setup. Okay, but I don't personally take the kind of like traditional way of double top, double bottom. Okay, I do utilize that pattern to identify reversal. But for gold, honestly, right now, nothing stands out, right? Okay, for today. So I'm just gonna really just leave it here. I'm not really that interested to take this buy on the gold. Okay, so yeah, so let's conclude a little bit for today, right? Today, there's really only these two pairs that I have trades on. Okay, first one here is on euro dollar. We are looking for a trend following very straightforward technique. Okay, looking to sell at 1.2135 with the stops at 2190. Okay, take profit here is 2055. You can see on this chart here, risk reward ratio is definitely worth that. Pound dollar is another one. This is more like a double top retracement technique. Okay, so some traders will probably call this like the 261.8. So double top is the 2, and then of course 618 here is the retracement Fibonacci level. Okay, so we're looking to get involved in this around the price level of 1.3635. The stop loss here, I'm a little bit more aggressive. Okay, so I put it at a 786, which is at 1.3670, and the target here is 1.3540. Again, if you take a look at the risk to reward ratio, it's definitely worth taking that risk. Okay, so that's all for me today. Okay, always manage your risk exposure, right? Especially since the euro and the pound, they are both very closely correlated, and we are taking both trades in the same direction. So you want to manage your risk exposure accordingly to that. All right, so that's all for me here today. Again, as usual, if you have any suggestions, feedback, just feel free to reach out. Okay, if not, then what we'll do is we'll see you guys tomorrow. Okay, and same process over here. I'll keep you guys updated on this 2 trade, and we'll analyze some of the new potential opportunities for the day itself. Right. So with that, I'm gonna see you guys tomorrow, and all the best for your trading session today. Okay, see you.